I suspect gold's telling you something about the financial system, that we're getting close to some sort of new financial system where gold might be part of a new system. And also gold could be anticipating, like I said earlier, a huge amount of quantitative easing and money printing in a recession. Our call is this. We're going to see a deflationary scare, which is a correction in the stock market, the asset markets.
Let's welcome Edward Dowd, founding partner of Finance Technologies, with a powerful breakdown of what's coming next. Gold is flashing a major warning sign. Why? Because the markets see a recession, exploding deficits, and the Fed's return to money printing. Is the stock market about to crash? Is QE inevitable? Stay tuned as Edward reveals the shocking truth behind gold's latest moves.
Gold is a proxy for money printing. And what the gold market's anticipating is a recession. And the gold market's anticipating the deficits are going to blow out even wider. And they will. So Trump and the team are going to try to hit the discretionary spending as much as possible, all the waste and fraud, which they say could be up to $1 trillion. During a recession, the deficit will widen. That's just the math. And especially if the stock market comes down. 25% of all tax receipts come from the stock market gains. So there'll be a widening of the deficit, and gold's anticipating that the Fed's going to do QE. That's what the gold market's anticipating. Well, gold goes up and down for a variety of different reasons. And if you look at commodities, the commodities basket, the CRB, it peaked in June of 2022. And it came down into 2023, and it's been going sideways. And the price of oil is indicating economic activity may be going the wrong way because, with all this geopolitical tension, oil should be spiking. So I suspect oil is telling you something about the economy. Gold's telling you something about the financial system, that we're getting close to some sort of new financial system where gold might be part of a new system. And also gold could be anticipating, like I said earlier, a huge amount of quantitative easing and money printing in a recession. Right now, we're not doing QE. Gold may be anticipating QE coming back quick.
Which would be inflationary, of course, right?
So our call is this. We're going to see a deflationary scare, which is a correction in the stock market, the asset markets, but we don't know what the policy response is going to be. And the policy response is going to be the Federal Reserve and fiscal spend to take us out of the recession. Once we see those, we suspect we're going to have an inflationary problem again. So we're going to have this roller coaster of deflation, inflation. We're kind of at the end of this system. The system is just so rife with too much sovereign debt, that you can't raise interest rates for too long to fight inflation without having a deflationary scare, which is what we're getting. And the only reason we didn't get it earlier is because of the government spending that we did the last 2 years. But we're close to the aha moment, the deflation scare, and then the massive policy response, which at that time will flip bullish and talk about inflation. Yeah. So Europe is a zombie economy zone. They really never took care of their banking issues, and the UBS was forced to buy Credit Suisse, as we all remember, in 23, and they took on that disaster derivatives book. They're now going to merge all that on March 4th. I think it's today. So they're going to now report. It's all the garbage from Credit Suisse is on their balance sheet now. So the Credit Suisse problem didn't really go away. It just got absorbed, and UBS was forced to buy it. So there's this looming problem in Europe, banking problem. There's definitely weak economies. Their stock markets seem to be still hanging in there. And there's a lot of hope and speculation that if Germany starts increasing its defense budget, everything's going to be fine. The gold coming to the U.S. is interesting. I actually tend to like Martin Armstrong's take that they're putting it over here because they're predicting a war is coming, some sort of war, which that's not good if that's the case. Well, obviously, the tariffs are a geopolitical tool, and one of the major things he's using them for is to stop illegals from getting in over the border and the flow of fentanyl and to clamp down on the border. And he wants the Canadians and the Mexicans to use their own resources to do it rather than spend US dollars to secure our borders. So the tariffs are kind of a big stick approach. There's also trade considerations. Whether Trump wants to make Canada the 51st state, that sounds like a classic Trump, art of the deal, say something crazy and then come to the middle. Now, maybe he does, and I'm not privy, I'm not in the room, but this all smacks to me of forcing Canada to the table and getting what he wants, which is a secure border and a fair trade deal. Canada currently imports about $400 billion into the U.S. We export about $340 billion. So it's only a $60 billion trade deficit, but and for us, it's a rounding error in terms of our total GDP. We're 29 trillion. Canada's 2.5 trillion. That's their GDP. So, 400 billion of 2.5 trillion is a big chunk. So we have a lot of leverage. So this is a leverage tool. Well, what I think is not being said is Dowd got in there a lot faster than I thought. When we wrote the report, I was under the assumption Dowd would have to be congressionally approved, and we wouldn't be hearing from Dowd until later in the Trump term. But they repurposed U.S. Digital Services Program and rebranded it. They had the keys to the IT data sets, and they got in there way faster than I thought. And what they've uncovered, and I think there's been a lot of shocking discoveries. Personally, I think they're holding back a lot of the fraud. And if you believe what I said about illegal immigration, that was washed through the NGO system. And I think there's a lot of fraud going on that is being looked at. And my opinion is they're going to be able to find a lot of fraud, but they may not want to publicly disclose it yet. I think the tariffs are coincidental to the inflation numbers. Inflation is coming down because economic activity is rolling over. And if you look at new tenant rents, which I talked about, that eventually gets into all tenant rents, and that's a big component of shelter, and shelter's like 37% of the CPI number. So inflation, we expect to come down throughout the year. I think inflation will print a number sometime in the fall, early winter, sub 2%. So inflation is an interesting thing. I don't know if you remember, but I remember quite well during the 2008 financial crisis, we had sky high oil prices, and oil peaked in June of 2008. And we printed an acceleration of inflation, May, June, July, August, and then everything just stopped and fell out of bed. So inflation, I think, is rolling over. The economy is contracting. There'll be credit contraction. And when we have credit contraction, we get disinflation to deflation. So I think it's already in motion. And the 10-year Treasury yields are telling you that. They peaked on January 10th. We're already down 50 basis points on the 10-year. So I think the Trump tariffs are just coincidental. And, economic growth slowing is going to bring down inflation.
If you found this insight eye-opening, don't forget to hit that like button, subscribe, and turn on the bell icon so you never miss an update. Let us know in the comments. Do you think QE is coming back? See you in the next one.